Well, the National Energy Board has conditionally approved the Trans Mountain pipeline expansion. Now, we know that the pipeline already runs from Edmonton through Kamloops to Burnaby. The new project would twin that existing line. The board says that the $6.8 billion project is in the country's best interest. It's recommending that Ottawa approve the project, subject, though, to 157 recommendations. So there's been a lot of reaction to this NEB decision. Let's cross to Tyler Orton from business in Vancouver. And Tyler, in terms of from a business point of view, what's the impact there?
Well, you know what? You brought up the fact that this is a conditional approval. There's 157 conditions that have to be in check here, one of which is very, very unique. It's going to have business impacts going forward. It requires a carbon offset program that Kinder Morgan is going to have to develop. It's the first time this has ever been required from such a major project. Kinder Morgan is going to have to offset 1 million tons of CO2, which is what this project is expected to generate. So there's different numbers for carbon offsets. Our best estimate for British Columbia, if that's in fact the basis that we're going on here, it's going to add an additional $30 million to this project cost, which could just be a drop in the bucket for Kinder Morgan, especially when you think that they're putting $6.8 billion into this. And that's just it. They're putting in billions. So we have to wonder whether this project, this is the big question, is whether this project is worth it for Kinder Morgan, considering how much oil prices have tanked over the last year and a half. Short answer, and this is the big subject of debate in the BIV newsroom, but the short answer is yes, it is worth it. The first pipeline was built decades and decades ago. This expanded pipeline will triple capacity from 300,000 barrels a day to 890,000 barrels a day of oil going from northern Alberta to British Columbia. This is expected to be used for decades going forward. So short answer, yes, it will be economically worth it for Kinder Morgan if they get the approval from Ottawa later on this year. Okay,
well, of course, emotionally, this divides so many people. So we're still a way off from everything being finalized, right? Because of these recommendations. I want to talk about our own costs. The inflation numbers are out. What are they telling us?
Yeah, you know what? If you're going to the supermarkets last month, we actually saw that the prices that you were paying, they were a little bit more expensive than the month previous, but that's actually kind of a good thing for the economy, I should say. If we take a look at the numbers, I'll break down what April was doing. Inflation went up 1.7%. That's a big jump from the previous month when it only went up 1.3%. But if you take away all the volatile numbers, I'm talking about fresh vegetables, fresh fruit, as well as gasoline, the core index was at 2.2%, which is closer to what the Bank of Canada really wants. So as I mentioned, veggies, they're up 11.7%, fruit is up 11%. Gasoline, that, however, took a dive to 5.8%. But those prices are actually leveling off. Gasoline in months previous, they're falling by like up to 18%. Women's clothing, now that fell just 0.5%, but men's clothing, that remained unchanged. So you might be getting some better deals at the stores. But I should emphasize this. The reason why the Bank of Canada has a target of 2% inflation is because it's actually healthy for the economy. It encourages people to spend money as opposed to just hoard it away in the bank. So if we can see better inflation numbers, closer to 2% going forward, that's going to be stronger for the economy. It seems as if April is showing signs of that as well.
All right, Tyler, always good to talk to you. Thank you so much. Have a great weekend.
You too. Thanks.
Thanks. Tyler Orton from Business in Vancouver.